Bitcoin has seen a short-term rejection following the retest of the range high at 70,000. What does this short-term correction mean? Should you be concerned, or are the bulls still in control? These are questions we're answering in today's video, along with so much more. Let's jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having an amazing day today. In today's video, we are taking a look at Bitcoin's price action on the macro and the short term, discussing the recent rally to retest the range high of the descending channel formation, the short term rejection, as well as the upcoming interest rate data. We'll also be discussing things such as the macro charts and the total cryptocurrency market, as well as going over the Bitcoin dominance chart briefly. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, take 15 seconds, go down to the description down below, click the first link to join the Telegram channel. We post daily updates, charts, analysis, videos, educational posts, news events, and everything you need in here to stay in the loop with cryptocurrency, to stay in the loop with Bitcoin, and everything in between. If you were interested in taking your trading to the next level, join us on VIP with nearly 700 members. We post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. Everything in here, guys, is easy to follow and detailed for you. You'll also get access to group chats, our general chat, our trading chat and education chat, our daily video, our help, and our news chat. If that is what you're interested in, go ahead and contact me in the pinned comment of the free channel by clicking my name or these links for more information. And in fact, we do have a sale starting today, and more information will be posted in that free channel. Let's go ahead, guys, and delve into Bitcoin. So as we can see, Bitcoin has had a fantastic second half of July. Ever since we saw the breakout of that downtrend diagonal resistance, that 5-week long downtrend, we have basically seen Bitcoin in a up-only mode. We've gone from the price of around 59,000 all the way up to retest $70,000. If you've been following the channel, you would know that ever since we broke out of that descending downtrend and we had that positive RSI shift, we have been exceptionally bullish, expecting a move to retest that range high. We have now accomplished that. Our bullish target was reached, and we saw an 18% rally in doing so. The big question now is, now that we have reached the bullish target, which was the range high of the channel, are we still expecting a break upwards of the channel? What is the short-term price action doing? Has this short-term rejection held any significance? And what will the interest rate data do/impact the charts? These are questions we're answering in the video today, but let's start on the market data. 24-hour volume is sitting at 161 billion. This is up 128% in the past 24 hours. 24-hour liquidations are up a whopping 227% at 186 million. Of the 186 million, 119 million have come from long liquidations, and the other 66 million have come from short positions. Again, taking a brief look at that price action, you can see just how Bitcoin touched the top of that range high, and ever since then we have been in a short-term downtrend. Again, we're discussing what this means in just a moment when we get to our short-term analysis today. Let's go ahead and jump over to the DXY. We can see the DXY is slightly moving toward the upside. Again, we do have to look at this price action and understand that any sort of movement moving into an event that has massive bearing over the dollar, of course, and over the risk asset markets, the price action moving into these events can be almost written down to emotions and more or less positioning or de-risking in anticipation of an expected outcome of these events. So we look at Bitcoin's price action, we'll touch on this in a moment, knowing that we have the interest rate event in about a day and 18 hours, the market is very likely to de-risk moving into that event. In actual fact, it is better if the market does de-risk moving into an event like that, so that if we do get bad news, it is absorbed much easier and there is much less volatility. And if we do get good news, well, we will see see that price action fly back upwards. We'll come back and discuss that in just a moment. So the DXY is still basically moving sideways, not really too much of a concern, and we're not really watching out for anything over here. If we do see the DXY break this macro downtrend, that would be exceptionally bearish for risk assets. But while we remain under here, we could see chop, more or less watching for a retest of 103 for our base of support. Looking at that economic release, of course, we do have the major interest rate data coming out in a very small amount of time. If we move over to this tab over here, we can see it is coming out in 1 day and 18 hours, and the expectation, 95.9% probability, we are going to see a pause in interest rates yet again, with only a 4.1% probability of a interest rate cut. So it is much more likely we're going to see a pause, and a pause is a good thing, again, as long as the narrative, which is we're moving towards an interest rate cut, remains intact. The asset market will likely continue to rise. We'll touch on more of that after the interest rate decision, when we actually know the result and we can actually discuss what that result is and what impact that will have moving forward. Overall, pay very close attention to this and expect volatility moving into it. Most importantly, do not over position yourself moving into a major economic relief such as interest rate data, which has actual bearing on the systematic risk of the market. As if you position yourself incorrectly and then the results come out opposing you, you can get pretty much wrecked if that does occur. So manage your risk moving into these events. If you're not in positions, maybe hold off a day and 18 hours. It's only 1 day and 18 hours. Wait for that news, wait for that data, and then look to enter the market. Things to think about, of course, make your own decisions. Moving over to the S&P 500 temporarily, and then we'll jump into Bitcoin. Not all that much happening over here. Again, provided we remain above 5,300, we are very much high time frame bullish. We could even see a short-term correction toward this level, but we are expecting macro continuations higher to 6,000 still, provided this level does hold. If we do drop below 5,300, that would mark this as a top, and we could see a high time frame reversal develop. That is it, guys. Let's jump into Bitcoin. A quick word from today's video sponsor before we do. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, BitGet and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the BitGet link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, BitGet and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and jump back into Bitcoin, and we're going to be taking a look at the macro and short-term charts to start off with, and then finish up on the Bitcoin dominance and the total market cap charts. So as we can see, Bitcoin has had a fantastic move upwards, as we discussed at the start of the video, reaching a high of $70,000, which is around an 18% gain from the breakout of that downtrend. Since then, we have seen a rejection from that $70,000 mark, which has resulted in a relatively steep short-term correction to now 66,600. As we can see, there are some very significant levels Bitcoin is retesting, which we'll be discussing right now. But before we jump into the short term, we need to identify the significance of the levels we're going to be discussing on the macro. So let's move over first and foremost to our daily and 3-day charts. If we're looking at this structure, this is going to be our descending channel structure. There are two objective realities of a descending channel structure. Number one, we move between a downtrending resistance and a downtrending support, which are parallel, and number 2, the structure itself, so the overall direction of the price action itself is a downtrend. So while we remain within a descending channel formation, we are in a downtrend, but we can have periods of shorter weekly uptrends and weekly downtrends ranging from the range lows to the range highs of this structure. Until we actually break out of that downtrending slope or that downsloping resistance at the range high, we are still technically within the confines of the structure itself. So although we have seen a fantastic move upwards, we are still technically within the descending channel structure, and we do not have all of the data we need or all of the price movement we need to validate a break upwards yet. So let's discuss what we'll need to see to get that break upwards. As we mentioned in yesterday's video, we saw a weekly candle close above the RSI downtrend, which we can see we are still sitting above, which is a fantastic sign. The weekly close above the RSI downtrend represents that during the period of price action of the last 4 months, of which the price action has been developing this descending channel formation, the momentum has moved from decreasing to finally positive. We have finally seen a positive momentum shift. With a positive momentum shift, it signifies we have got weekly strength, and that increases the probability of a break through the resistance than a rejection. Now, this doesn't have to play out on the first attempt. Remember, this is a weekly chart. What we have seen is a short-term rejection. That does not invalidate these probabilities. It is sometimes important to zoom out your perspective and not just look at the 5-minute charts, okay? So when we're looking at the descending channel structure, to actually validate that breakout, we need 3 things. We need strength, we need structure, and we need trend. So let's break it down. Have we got the strength required to break out? Well, according to the momentum, we do. We've had that positive momentum shift, and we can see the daily momentum has been positive for about 10 or so days. Looking at the next element, so we've got strength, we can tick that off. We've got structure. Do we have a break of structure? At the moment, we can see the price action is still within the confines of the descending channel structure, and therefore the descending channel structure could continue while we remain within it. So we do not have a structural break of the channel. And number 3 is going to be trend. The trend is represented by the range high resistance, which is going to be this downtrending diagonal resistance, which also is the range high of the descending channel structure. Do we have a trend break? No, we don't. So what we have over here is we have 1 out of 3 validations for a potential break upwards. So as of right now, we can't say with a mass degree of certainty that Bitcoin is going to break through its resistance. All we can say, and what we have been saying, is if we are able to see a positive momentum shift, the probabilities that we will see a breakout eventually is going to be there while the momentum remains positive, as that is an indication that the buyers are absorbing the selling pressure, and that continues, we will eventually see those resistance levels broken. And we can see a perfect example of how this actually plays out right over here. We can see that we had that RSI breakout, and what we saw from that RSI breakout was the price rise 18%. So we are expecting a similar reaction on the price action moving forward. Now, there are invalidations of this, so we have to talk about at what point does this invalidate, and that is going to be from a structural perspective, and we'll talk about it in a technical perspective in a second, the 63,000 or the midline of the descending channel formation. As you have known, if you've been following the channel for quite some time, we have discussed this midline now for many weeks. We told you well before we broke above that if we were to break above the midline, we would see a range high retest, which we have done. Fantastic. As we have seen in the past, when we break below the midline, we see range low retests. The midline is a trigger point for directional continuations to the range highs and range lows of the descending channel. It behaves like any other short-term descending channel would. It is just on a higher time frame. So for us to see a directional continuation to the range low, we would be expecting, or we would need to see a breakdown of 63,000 prior to that being a likely scenario. Until that occurs, the probabilities is shaping up for a break upwards. Now, this is very, very important you understand and pay attention to this. The interest rate data can play a massive role in influencing the short and macro directions for risk assets. And that's why I'm saying we have to pay attention to the upcoming data, as the market could be flipped on its head or shot up in one direction or pulled down in the next direction based on what we see this data come out as. So we have to very much pay close attention to that, particularly if the result is not the expected result, because the expected result is most likely going to be priced into the market. So let's take a look now at the macro expectations. If we see a break of this channel, we will have officially had the 3 out of 3. We would have strength, we would have structure, and we would have a trend-based validation. We would then be expecting a macro continuation into that 85K region. Why? Because the directional expectations upon a breakout of the descending channel is a bullish reversal. Furthermore, the measured move from point 1 to point 2 applied to the expected breakout point is going to give us a range of around 85,000 for an expected target. That is what we expect to occur if and when we break out of descending channel resistance, not now. That is not a target for now. We've been saying this the entire time. Only when that descending channel formation breaks, then that expected move is valid. Okay, let's move over to the macro charts. What we can see here in the macro chart is our 3-day chart, some very important levels to support this. Support the claim that 63 is so significant. First and foremost, we have got our baseline of the Ichimoku cloud, this red line. This lines up perfectly with 63. And secondly, and very importantly, we have got the leading span A. And again, the leading span A is going to be the upper green line, which forms the top part of the Ichimoku cloud. This as well is sitting at 63,000, a very important point. Historically, when we drop into the clouds, we see a drop to the leading span B, which is the range low of the clouds. Meaning if we drop back into 63,000, we are likely going to come back to retest the leading span B, which is sitting at 56,000, which is going to be, if we move to this chart, this liquidity pocket represented by this green square. So in other words, we drop below the midline, we are going to see a range low retest again of the descending channel formation. This is where it gets very interesting. If we do see that happen and we remain above the descending channel formation, we are still within the descending channel formation and we could see range high sweeps. It is only if we drop below the leading span B, which is this red line, would we then expect a macro continuation downwards? Remember, historically, on the 3-day chart, every single time we have closed a 3-day candle underneath the leading span B of the Ichimoku cloud, we have seen macro corrections of Bitcoins between 15 to 71%. Every time, it is not a question. We have seen it every single time in Bitcoin's history. You can go back and look. We have seen corrections of at least 15% for Bitcoin. That would take us into the $46,000 region, and we would definitely not like to see that. To avoid all of that, we need to remain above 63,000. So let's jump into the short-term price action. This is the current uptrend Bitcoin is moving in. Now, this is our horizontal chart. We do not have the macro descending channel diagonal levels represented on this chart, but we do know where that is sitting at that $70,000 region. This is our horizontal chart. What we can see over here is we have our diagonal uptrend, which is the uptrend we have been in ever since we broke out of that 5-week long downtrend. This is the uptrend we have been in. So, as we can see, Bitcoin is now coming down to retest this uptrending trend line. If Bitcoin were to break below this uptrend, we could see a correction back into the $63,000 region. Now, remember, even if we see a correction to 63,000, it doesn't matter. What matters is that we remain above 63,000, as 63,000 is the bearish trigger point for a high time frame correction toward the range low of the channel. Only a breakdown of 63,000 would increase the likelihood of a move to the range low, not a breakdown of this uptrending diagonal trend line. The break of the uptrending diagonal trend line could facilitate the move to 63,000, but would not validate a break under. Very important distinction to make. So if you're watching out for the higher time frame, you shouldn't be too worried about that short-term move. If you're watching on the short term, if we lose our short-term uptrend, we could see a short-term correction towards 63K, moving into the interest rate release. Now, with that uptrend being an invalidation, provided the uptrend is able to sustain, we will likely see Bitcoin continue back toward the upside. So let's jump down to a smaller time frame and discuss that now. Jumping over to a smaller time frame, we can see Bitcoin is sitting right at that uptrending diagonal trend line, right at that liquidity pocket, right at 66,000. As we mentioned in our prior videos, the levels of which we are looking for downside support is going to be the prior high. This is going to be marked out at 66,000 as per this green horizontal line. We are also looking at our lows of our peaks on our VRPVs. We're looking at particularly price points of around 65,000. This is going to be marked out on our green line. And of course, our next one we are looking at is going to be marked out by this change of character right over here at around 65.6 to 65.4. So those green lines are going to be the short-term supports between the current diagonal uptrend and the $63,000 support level. Again, guys, moving into interest rate data, it is normal to see volatility because the market is moving to adjust its risk and adjust its positioning into a high-risk event. So if you see short-term corrections, if you see short-term volatility, that is perfectly normal, guys. Okay, that is it for the short term. I wouldn't stress too much about it. Provided we hold this support, this is going to be the local bottom. We would see continuations higher. If you do see that support levels lost, we could see corrections towards these green levels. And guess what? If you do see 63K, it is only a big worry if 63K is lost. I'd definitely be looking to re-enter or position myself again after I've sold up over here for my longs to enter Bitcoin if we do see a retest of 60. That is it, guys. Let's jump over to Bitcoin dominance. Bitcoin dominance is retesting and rejecting, which is a good thing, from its major yearly resistance. This resistance has been a long-standing resistance from the prior cycle as represented by these red circles. We can see that historically in every single bull run altcoin cycle, we see Bitcoin dominance crash significantly to that 40 to 38% region, which is where we see a Bitcoin top, right? This is where we see the Bitcoin top, the cycle top, at this 38 to 40. We saw it over here in 2018, 17. We saw it over here in 2021. We are expecting a very similar reaction this instance. If Bitcoin dominance is able to break down this trend line, we are likely going to see a steep correction in Bitcoin dominance towards the top to create a cycle high. And of course, we would see altcoins rally significantly if this were to occur. Now, if we do see Bitcoin dominance correct, for altcoins to see a massive, massive rally, we would also need to see the total cryptocurrency market increase in value. If we see on the flip side Bitcoin dominance rally, this will result in altcoins bleeding in comparison to the Bitcoin pairs, regardless of where the total market cap goes. Let's look at the total really quickly. What we can see on the total is, again, we do have those respective descending channel formations. We can see that neither of these charts have retested their respective range highs, which tells us that Bitcoin is steaming ahead of the crowd in comparison to the rest of the markets. Again, guys, we are expecting retests of these range highs because we have broken through these midline levels. This may take a few more weeks. So do not rush it. Pay attention. If we're looking at invalidations for the altcoin market, if we were to drop back below 520, 510 billion, that would be quite catastrophic. And for the total, if we were to drop under around 1.9 trillion, that of course would be catastrophic. We're going to leave it there, guys. Thank you for tuning in. We'll catch you guys in our next video on Thursday after the interest rate data. See you then.